Buying a house is one of the biggest investments you can make for you and your family. In this video, I will help you understand when you might need to start considering homeowners insurance during the purchasing process and discuss how to protect one of the most important investments you'll ever make. Hello, I'm Sean with Malhotra Insurance. Let's get started. So, why do you need homeowners insurance? Homeowners insurance helps protect your house against named perils and natural disasters. It also helps to protect your assets against liability and also provides coverage in case someone steals property from your home. As a part of your new home closing process, you will need to provide proof of homeowners insurance policies covering your home. This is necessary because although you will most likely put down a payment on your new home, your lender is putting up most of the money to purchase the home. Homeowners insurance helps secure the purchase in the event that loss or natural disaster. For example, if your home was lost in a fire or natural disaster and you didn't have homeowners insurance, your lender would lose out just like you would. Is homeowners insurance mandatory? While there is no law that states that homeowners insurance is mandatory, it allows those with an invested interest protect their investment. In most cases, these entities include yourself and your mortgage holder or home equity loan holder, who often require proof of homeowners insurance at closing. Ultimately, homeowners insurance is a good idea to protect you and your lender's investment. What does a house closing look like? When you purchase or refinance a home, the last step in that process is called the closing. Closing is the time when you finalize the details of your transaction and is typically held in an attorney's office, your lender, or another location. Ultimately, it is the last step in the process of home ownership. You can expect to pay different closing fees, including origination fees, fees charged by a lender upon entering into a loan agreement to cover the cost of processing the loan, underwriting fees, fees associated with lender's overhead and administrative costs during the execution of your mortgage loan, appraisal fees. An appraisal fee helps to cover the cost to have an appraiser assess a home's market value. The fee is usually paid by the buyer unless they negotiate for the seller to pay for it. Credit report fees. The fee associated with running a credit check during your loan origination process. Title search fees. This fee allows title search agencies to help determine if anyone has legal interest in the property you are purchasing. At maximum, it can take up to 50 days to close on a property, with the average being 35 to 47 days. Closing fees tend to typically trend with the property's asking price, and you can expect to pay 3 to 5% of the home's assessed value in closing fees. The median estimate for closing fees in 2020 was $3,312. Delivery costs can be included in the mortgage amount. This is called a no delivery cost mortgage, or paid in advance to avoid paying additional interest. To ensure a successful closing, it is recommended that nothing changes financially for you during the closing process. In fact, many lenders also recommend against making large undocumented cash deposits or opening new lines of credit during the closing process. Do you need your insurance agent present when closing on a house? While you don't need an insurance agent present during the closing of your house, here is a list of interested parties that might attend on each side. From the buyer's side, your real estate attorney, if you have one or it's required by law, the lender's representative, the buyer's agent, the company representative. And on the seller's side, their real estate attorney, if they have one or also required by law, seller's representative, seller's agent, notary public. Although your homeowner's insurance agent likely won't be present during this very important moment in home ownership, lenders will require proof of homeowners insurance at least 3 business days prior to the end of the closing process. Additionally, they will typically require a year of homeowners insurance to be purchased. Homeowners insurance helps to ensure that your new investment is protected in the event of a natural disaster. Your homeowner's policy typically includes coverage from the following. Your house, often referred to as dwelling coverage. This will protect you from damage to the house and its accessories, such as your garage, fireplace, in-ground pool, and more. Personal property. Your personal property is typically anything that is owned by you. In addition to providing protection for your personal items, such as computers or phones, it also includes protection when those items are not at your house. For example, If your phone is stolen from your car, your personal property coverage will cover it. However, there are limits to this for valuable items, such as jewelry and artwork, and it is important to make sure any higher value items have additional coverage. Other structures. This includes fences, sheds, or any other structures that exist on your property. Additional living expenses. If one of these covered perils occurs and your house is uninhabitable, you will get a loss of use coverage for any additional living expenses you might incur. Your insurance company can help pay for temporary housing and basic living expenses, such as food, laundry, hotel costs, and more. In these cases, your deductible is not applicable. Personal liability. This refers to the coverage in case someone gets injured on your property and it is your fault. Additionally, this also provides protection if you or anyone else on your policy causes damage to someone else's property. In these cases, your policy will have you covered. Keep in mind that these coverages don't cover injury to yourself or anyone covered under your insurance policy. Medical fees. Liability insurance covers damages in the event that you are sued. However, medical fees can cover injuries that others may sustain when they are at your house. It will help to cover any medical bills they have. In summary, here are a few key takeaways on why you should get homeowners insurance prior to closing on a house. It is required in most cases. Your lender will almost always require proof of homeowners insurance prior to finalizing your loan details. It protects you and your lender's investment. Homeowners policies are designed to provide protection for the largest investment most of us will make. It also helps protect your lender's financial investment in the event of a natural disaster or other catastrophe. It protects you from other events. Homeowners policies can help provide coverage for liability, structures, and medical fees, to name a few. It will help to ensure that your house is covered in most events that are outside of your control. For more information on homeowners insurance, please visit our website or call us to speak with one of our agents today. We are here to help.